Bitcoin has had a fantastic and shocking start to 2023. After a year many would consider to be the worst crypto bear market we have ever experienced in the history of Bitcoin, Bitcoin is surprisingly rallying off higher interest rates and falling inflation. This is a trend many people were completely not expecting from an asset that was considered so risky, and many investment managers are calling a complete fraud and a scam. But unlike what many investors thought when Bitcoin broke below 15,000, it turns out there's more value in this cryptocurrency and the underlying technology than many people initially thought. And there is no other investment of mine that is benefiting most than Coinbase stock, which itself is up almost 40% over the past 1 month. In this video, I want to share how Coinbase will be affected throughout 2023 and when can we expect this crypto bear market to flip to the upside in a bull market. This is a really important video if you want to understand the timeline and the history of previous cycles in the crypto space. Because even though history does not tend to repeat itself, it does tend to rhyme. So we can take a lot of information from prior data, which is exactly what I want to address in this video. But as usual guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. As of the filming of this video, Bitcoin is up 36% year to date, with Coinbase stock up 64%. Who would have thought you could get these kinds of returns after all the FUD and fear we were seeing in social media and on Wall Street? But clearly, it turns out there's value in crypto. And like I've said many times, for me as an equity investor, there is no better exposure to the crypto space than Coinbase stock. There's been numerous reasons for why that's been the case for me. Yes, the company is going to see falling profits, but that's not a surprise because most of their revenue comes from trading and such associated fees. They were highly profitable back in 2021, made over $5 billion in net income, and now that we're in a crypto bear market where people are losing faith in retail cryptocurrencies and stablecoins, obviously the company is going to be a lot less profitable. But this is one of the only businesses that is an onshore exchange in the US that has all its financial statements audited by the US Securities and Exchange Commission. This is exactly what sets Coinbase apart from all the other bankrupt crypto firms and all the other fraudulent businesses. Coinbase is actually proactively cutting costs ahead of time, not when it's too late like FTX and Genesis. Coinbase CEO and executive team have been through such bear market cycles over 8 times since the inception of Bitcoin and the inception of their own company. This is a really important competitive advantage that this company has over its competitors. And if you're anywhere close to being a long-term bullish investor in crypto, Bitcoin, Ledger, or blockchain, Coinbase stock is probably one of the best picks in the equity space. Now, yes, there's no way to know if this rally is going to take us out of this bear market, but there are really good odds telling us that the next 18 months could give us exponential returns in the cryptocurrency space, which means Coinbase will benefit massively given just how much destruction we've seen in valuation and sentiment around this company. For those that don't know, 2024 is a halving year for Bitcoin. And halving years since the inception of this cryptocurrency have been extremely bullish and have given us great returns for long-term investors. You can see that in 2012 and in 2016. Yes, we saw a massive bear market in 2014, which saw Bitcoin decline 84% from its peak. To put that into perspective, Bitcoin right now declined a peak of around 79% from its peak. So even if you want to look at the averages of prior Bitcoin cycles, we are falling right in the middle of what the average drawdown has been. And as you can see, the timeline actually looks uncannily similar to what Bitcoin is doing today. We had a peak in the fall of 2013, just like we did in the fall of 2021, and then we had a declining year for the entirety of 2014, just like 2022 so far. And then we had this kind of calm year in 2015 where prices stabilized, went sideways. We saw some rallies that many people probably sold into because of the lack of faith in the cryptocurrency space. And then in 2016, which happens to be a halving year for Bitcoin, we saw an insane 400% rally in the price of Bitcoin. And this, in my opinion, is exactly what we could see a repetition of over the next 18 months. No, that does not mean we're going to get Bitcoin up 400% in 2024. Like I said, history does not repeat itself, it only tends to rhyme. As you can see, all the bear market cycles we saw over the past decade in Bitcoin followed a very similar pattern where prices rallied aggressively, they went sideways, then rallied aggressively, and then went down for an extended period of time before bottoming and then continuing their rally up. We saw this happen in 2015, and obviously we saw a repetition of that in 2020 and 2021. So chances are this is going to repeat itself once again. Bitcoin is not a fraudulent asset, as we've seen. There's only 21 million of them going to be built, and transactions on the Bitcoin ledger have been going up every single year since its inception. Now, I'm sure you guys are asking, why don't you just buy Bitcoin directly instead of buying Coinbase stock? Why would you buy a company that potentially has the risk of going bankrupt instead of just buying the Bitcoin itself? Well, there's two main reasons for that. First of all, Bitcoin is down 80% in 2022. Coinbase is down 90% since its peak. Coinbase has become a derivative of Bitcoin because it is driven by sentiment in the equity markets, which are historically much more fluid than what's going on in Bitcoin. And as you can see, year to date, Coinbase is up more than Bitcoin, almost 60%. Which means as a long-term investor, the return on investment I can get with Coinbase is going to be higher than Bitcoin because it is down magnitudes more because of the fear in equity stocks. And that high return I'm willing to pay for a company that is so well established, that has higher experience than any of its nearest competitors in this space, and that has a management team run by its founding member. This is an important differential between this company and FTX and Binance. Yeah, Binance is probably bigger in terms of volume, but it doesn't have anywhere near the institutional backing that Coinbase has. Neither does it have the trust that people have investing on Coinbase after the FTX debacle that we saw happen with its token in November. And as we know, crypto innovation is being sparked primarily in US companies and by US creators, which is why, for me, Coinbase is the number one pick for equity crypto. Yes, Coinbase's revenue has fallen dramatically from 2021, and that definitely results in reduced investor confidence, and as a result, the share price deserves to be at the levels that it is today. But even despite the rout and the fear around cryptos and NFTs, Coinbase's quarterly revenue is still higher than where it was at the end of 2020. And because Coinbase hired aggressively in 2021 and invested like crazy after its IPO in April, the company is now running at a negative operating income. This obviously is a concern if you're more of a shorter-term trader on Coinbase stock or any other business that operates in this industry. But if you're a long-term investor, you should actually see this as an opportunity if you believe in the business model the company offers. As you can see, their losses are starting to rebound to the upside because obviously they saw this one-time hit where all of a sudden they saw trading revenues collapse, meaning they had to invest in other forms of revenue streams, being subscription and interest income. That kind of stuff obviously does not happen instantaneously, and it takes a couple of quarters for the company to start cutting costs and pivoting its business model for the macroeconomic environment. That is the edge you have as a long-term investor, believing in a business and understanding the macroeconomic forces at play that could result in recovering revenue and profits for a company. As you can see, even though total transaction revenue fell because of lower trading volumes, their subscription and services revenue on a year-over-year basis are up 50% since the middle of 2022. Particularly, their interest income is up almost 500% since this time last year. That is a significantly impressive feat in an environment that is so difficult. This is being helped by the higher interest rates the economy is facing today, meaning Coinbase has a buffer to make money even if economic conditions are tightening. And this interest income, for example, is driven by a stablecoin by the name of USDC, for which Coinbase has a joint venture with one of the most popular DeFi firms, Circle. USDC right now is undoubtedly the number one stablecoin in the industry, and given the benefits stablecoins provide to all the fraudulent activity that takes place in the cryptocurrency space, being backed by the US dollar, there's an insane value proposition that USDC provides to the cryptocurrency space. As you can see over the past 12 months, this USDC coin has been performing its job just like it's supposed to, maintaining a stable value while being backed by the US dollar. And this certainly could be the platform for the US to create its own central bank digital currency. Although that's a whiles away, regulation is going to come in the crypto space sooner rather than later, especially with the spot ETF coming for Bitcoin from Grayscale. And as a result, the tailwinds that USDC and other stablecoins in this industry are going to have are not something we want to ignore. And as a result, Coinbase will be benefiting directly from that. And that doesn't even account for one of the most overlooked things when it comes to understanding Coinbase's financial position. Many people think this company is on the verge of bankruptcy with the cash burn that they've had over the past few quarters. But lucky enough, there is a massive misunderstanding that's going on when it comes to the company's balance sheet, which we're going to address now. You see, when people look at Coinbase's assets, they see $107 billion in current assets, which are essentially liquidable within the next 12 months. And if they look at the debts or liabilities the company has, they see a total of $102 billion in current liabilities. If you take this ratio, it doesn't necessarily look like the company has a good liquidity position. Because if you divide the two numbers, you only get a buffer of like 1.05. But once you realize that starting the second quarter of 2022, Coinbase started adding a particular line item by the name of customer crypto assets and customer crypto liabilities to its balance sheet, you realize these numbers are bloated way out of proportion. As you can see, both of these numbers on the line items are the exact same. These are the amounts of cryptos that are held by customers. And this is something the SEC told Coinbase to do on its balance sheet, which is outline exactly how much assets that their customers hold. As you can see, custodial cash liabilities are also added right here, which sit around the same level as on the asset side as they sit on the debt side. And so, if you factor out both of these safeguarding line items from their assets and liabilities, you get an actual current ratio of 7.85, not 1.05. This is something investors actually look at on Wall Street to judge the viability of a company. And as you can clearly see, this balance sheet restatement that Coinbase had to do in 2022 significantly skewed their balance sheet to look a lot worse than it actually is. Meaning the company has plenty of liquidity to fund its operations in the short term, and it should be able to pay off all of its debts within the next 12 months. And that is just one of the things I think investors are overlooking on Coinbase stock. As usual, guys, let me know your thoughts down in the comment section below, because this is just my opinion and nothing on this channel is financial advice. Thank you very much for watching, and I'll catch you guys in the next one. Take care.